Most SCS students fail because of the same reason. Not because they don't have a technical knowledge, because they do. Not because they cannot write, because they can. They fail because they walk into the exam room without a clear picture of what's actually broken inside the present company. And here's something I want you to really hear, because it changes how you should be preparing right now. SCS is not a technical exam. I know it sounds strange. You've spent years building up your E3, P3 and F3 knowledge. And now I'm telling you, this exam is not really about that. But it's true. It's true. SCS assumes you already have the technical foundation. What it actually tests is whether you can look at the real, messy business situation, work out what's actually going on, and put forward a clear, defensible recommendation. And that's a completely different skill from passing your OT tests. And Kwirtmak has a lot going on. A revenue collapse that the board hasn't explained, a foreign exchange loss 4 times higher than their closest competitors, strategic decisions that have been delayed too long. These aren't just side issues. They are the spine of your exam. Hi, I'm Justina from Practices Academy, and our lead SCS tutor, Nisha, has gone through the Kwirtmak pre-scene line by line and pulled out 7 key issues to drive the questions on the exam day. Today, she's walking you through 3 of them. So as you watch this, don't just listen for the facts. Listen for why each issue matters and how they connect to each other. That's where SCS marks live. Over to you, Nisha.
Welcome to the possible issues document or the key issues document for your latest pre-scene, which is the Kwirtmak Group. Now, Kwirtmak Group is a commercial 3D printing company, and they manufacture 3D printers. Now, there are some key themes in your pre-scene, key issues you would have identified when you watch your pre-scene analysis video as you attempted mocks. And now we come to this document, this brief video, just before you sit for your exam with some of the biggest themes, in fact, key issues from your current pre-scene and how this can translate into possible examinable strategic issues on the day of your exam. Now, Kwirtmak operates in England. So there were some key aspects relating to revenue, key aspects relating to products that your pre-scene really identified. So let's look at these issues. But before we do, I want to highlight that our discussion today is mainly focused on identifying these strategic problems, understanding why specifically was Kwirtmak chosen as the hypothetical company for you, some of the key pre-scene details, and what you can expect on the exam day. So use it. Use this document to identify these specific exam issues, identify specific numbers, values pertaining to Kwirtmak that makes a big impact, and look for connections between these issues. That is where your examination success will really be. So the first biggest glaring key issue from your pre-scene is the revenue collapse and the divergence between our closest competitor, Bresco, who has almost identical operations to us almost. The revenue divergence is one of the key things. So we can see our revenue declined by 18.8%, while Bresco's actually grew. So this difference, if we are the same type of business, we have the same industry, same country, same overseas, the countries can be different, but we both operate globally, there is a big reason why our decline is caused. So we need to see why this decline is caused, and we need to understand that while having identical markets, product ranges, we need to see if the divergence, we have to make sure there is no structural explanation. So this requires a board level strategic response. So here, this is where you come into play. Working with the board, you need to be able to assist with these key aspects. So remember, what's the impact of our revenue divergence? The impact is, of course, one is financial damage, the imminent margin damage, the ROCE decreases, the interest cover decreases. So these are not good. And one of the key aspects is now our revenue declined by 18.8%, but our cost of goods declined by only 9.3%. Now this indicates that we have a pretty high fixed cost structure, and that means we can't just flex our cost with our revenue. Now that is definitely something of concern. That means our profit will erode faster than our erosion of our revenue. So then we need to identify what are the risks of this decline in revenue or this divergence. Many risks. One is it reduces our scale of operations. If we are not able to earn revenue, make profits, that means we will have less research and development funds to invest. Our manufacturing efficiency will weaken. Our customer leverage will weaken. These are some of the key aspects. And when that happens, we might be vulnerable to a takeover. So we don't have financial capacity. So we might be a target for acquisition. And if our share price continues to decline like your pre-seen shows, with the high volatility of the beta, we become an increasingly attractive target for companies like Bresco and other overseas competitors as well. So we are definitely at vulnerability as a part of our key strategic risk. Then, of course, we need to think, when our profit has fallen by 20%, paying such high dividends despite the profit fall, does it make business sense? Because we should now use this profit to actually invest in strategic avenues, invest in new technologies, to pick up pace, to increase capability. We should try to invest in carbon fiber or enter the medical market in a more increasing manner. So that is something that the board needs to also consider. And of course, the reasons for the divergence. So there are 4 reasons given here. One, technology gap. So for an example, some of our key customer segments, aerospace and automotive, require carbon fiber. So are we not offering this technology, and is our closest competitor potentially offering it, and is that why we are falling back? Or is it because of our commercial execution? Is our sales team not doing a good job? Is our pricing strategy ineffective? Is our marketing ineffective? Then what about our geographic mix? Are we selling to weaker markets compared to Bresco? Is Bresco, so we need to do a benchmarking. Is Bresco selling to more competitive markets and thereby getting higher revenue? Or is it because, again, it's connected with the technological gap? Is it our R&D capability that's lagging and again causing the divergence? So I just think this whole reasons for divergence is a very important theme on the day of the exam, and for you to know as a part of the key top level team. So this brings us to the question, how do we compare our vision with where we are at? And how does the board show accountability for it? Because our vision is to be a leading provider of additive manufacturing solutions. But if our revenue is declining, we're really not achieving that goal. Rather, we are declining. We are further diverging from that goal. So that is an issue. So we need to make sure that our non-executive directors are fulfilling their role. They are directly, formally challenging the CEO's strategy and making sure their company is run in line with its vision and mission. So now you have certain likely examinable scenarios based on the revenue divergence. One is about our strategy. Is it effective? What can we do to reduce our revenue gap? What are some practical aspects? So these are the examinable areas, the exam signal, which you should prepare for. and how shareholders might also start questioning this revenue divergence. Now, this brings us to the next key issue. This is the strategic options for growth as a company. Two main key strategic options given, I would say two urgent growth aspects given in your pre-scene is carbon fiber capability and entering the medical market. So to do this, of course, this will be good. This is, of course, a potential to deal with issue 1, the revenue divergence. So to deal with this, we definitely have to look at these opportunities. We need to identify how we can enter these markets. We have to identify maybe the suitability of our entering, the acceptability. So we have definitely the ANSOF matrix, the ANSOF analysis. So when it comes to carbon fiber, we're developing a new product to sell to our existing market. Whereas when it comes to the medical market, we are talking about the same product to sell to a new market, the medical field. So then we can do the SAF framework. Is it suitable for us? Will our shareholders accept it? Will they be happy? Is it in line with our vision, mission? Is it acceptable in terms of, will it be something that our shareholders will accept? Our stakeholders will accept, our employees, our wider regulatory aspects, will they accept this move? And the feasibility, do we have the technical, operational, financial feasibility to run these options? Then, of course, capital investment. Now, you won't be directly asked to do an MPV analysis, but you, as a part of the senior finance team, you will need to interpret results possibly just to identify how we can invest on whatever R&D we are focusing on, whatever expansion we are focusing on. Then we need to make a decision. Are we going to entirely organically build these capabilities, whatever we choose? Or are we going to buy a company that has this capability? Or are we going to partner? So that's when we need to really identify the pros and cons of each of these. We need to identify the risk of each of these options. And decide when we are doing that. So, of course, we also need to understand when we're entering a new market or a new product, there will be risk. So the board must commission a comprehensive risk assessment. You can be a part of that financial risk assessment specifically. Identify the specific risk, for an example, when it comes to the medical aspect. So there is a product liability risk. There is regulatory compliance risk, reputational risk. So how do we manage this risk? Now, these will, of course, link two possible examinable scenarios as given here. So you might need to evaluate these options using the SAF framework. You will need to evaluate whether entering the medical market or even carbon fiber capability. Recommend whether we should build it, buy it, or partner with some company. Assess what option is the best strategic option to close the gap with Bresco, and talk about how delaying, for an example, carbon fiber capability could affect our competitiveness. So then we move on to our third key issue, which is foreign exchange risk and treasury strategy. Now again, here we can compare ourselves with Bresco, our closest competitor. We can see now we both operate in England. So we should have similar, ideally, now this is also a key red alert kind of an issue. We should have similar currency reserves. But you see our currency reserves fell by 44.3 million in financial year 2026, 4 times Bresco's. So why is this? We both have similar overseas operating structures. Both are inland-based and global-based. So this disproportionate or difference actually goes on to show that our hedging strategy might not be effective compared to Bresco's. Of course, it can also mean we don't know the subsidiaries Bresco is operating and we are operating in. So maybe we are operating in more vulnerable regions, more volatile regions. That is a possibility. But assuming that is not the case, we need to see that the most direct aspect is we are not managing our risk effectively. So that brings us to the currency risk. So there are 3 currency risks, as we have the transaction risk. So that's time between invoicing and payment, which is very likely with our commercial B2B customers. Then economic risk, the long-term risk of exchange rate differences affecting our competitive positioning. And of course, translation risk, us with our overseas subsidiaries translating the financial statements. So the question is, how do you mitigate these risks? So of course, for transaction risk, hedging will come into play. So good hedging options, appropriate hedging options are important. And of course, when it comes to economic risk, we need to think of diversifying, increase marketing, so that we can increase our competitiveness overall. So if you look at the CFO, Agatha, she needs to be able to deal with this. But again, she needs to identify and review our hedging policy. Which of our subsidiaries are hedged, what rates, what instruments, and understand what's causing this losses we are making when it comes to our foreign currency reserve. And we need to identify the cause of it. It's not given explicitly, but we need to identify it. And we also need to identify it as a main aspect in our risk register. It is a principal risk, it is material, but it is not explicitly stated. So that is a big issue. It's actually a governance failure because the risk register should address such a material risk. So the board can actively look into it, the board should actively consider it and include it and make sure appropriate hedging and management techniques are put into place. And of course, this brings us to, along with hedging, we need to always talk about accepting customer contracts or not, depending on the transaction risk. Depending on the transaction risk we have, and identifying whether we can agree to a customer's terms and conditions, such as maybe paying in their local currency, and the impact it will have on our currency reserve. You can expect these questions on the exam day. So what are the kind of questions you can expect? Again, I'm highlighting it for you. You can expect these kind of questions about the currency risk, how to manage it, recommendation of appropriate hedging mechanisms. They should be in line with the scenario, not generic. How do we evaluate our current hedging? So you might be given information about our current hedging, so you can identify how we can improve it, and also how we can decide whether to accept a customer request to pay in their local currency or not. So I want you to focus on these issues. I want you to spend more time on these issues because these can very well be some of the key areas on the day of your exam. And good knowledge on this will be the difference between a good answer and a mediocre answer that doesn't pass the exam.
So those were the 3 issues that Nisha has walked you through. And honestly, even just sitting with those 3, properly understanding why they matter and how they connect, will put you ahead of most of the candidates walking into the exam. But I'll be straight with you. There are 4 more issues we didn't cover today. Corporate governance and board effectiveness, including a really specific weakness in how Kwirtmak's committees are structured, that's almost certainly going to come up. The capital structure question, whether the board can actually keep paying dividends without profits down 20%. The gaps in the risk register, 3 material risks that aren't disclosed, and how examiners love to test exactly that kind of thing. and acquisitions, ethics, and change management, because Kwirtmak is both a potential target and a potential acquirer, which opens up a whole layer of valuation and ethical scenarios. If you want to go through these properly, with Nisha walking you through each of them the same way she did today, they are in 5-hour Master and Ultimate packages at practicetestacademy.com. These packages also include full pre-scene analysis, 6 mock exams with model answers, and her feedback on your attempts. Link in the description. If today's video helped, please hit subscribe and like our video. We'll be putting more SCS content. And good luck with your preparation. You've got this.